What's your cash position? Why does it fluctuate so much? And is that reflective of your view on the market?
Okay, so cash today is at about somewhere between 16 and 17% of net assets, up from just under 10 in June. And actually at some point it was in the mid-single digits, or a bit lower even, during the year. And as I mentioned earlier, this time last year we were at 18, so it went from 18 to low single digits, now back up. We never think about cash as an active decision. The way cash goes up or down is a byproduct of our process. So we talked earlier about the portfolio review that we do every quarter. If we find that XYZ company that we own is too expensive and we need to sell it, then we sell it. And the act of selling it generates cash that goes into the cash position. And if we find another company that we like, we buy it, and that takes cash down. And so we don't think about cash at all unless there is an exception, and the exception is if cash is zero. And when cash is zero, you need to think about cash because we run an unlevered strategy. And so at that point, you think about cash. Well, you have to think about cash because it doesn't exist. So if you want to buy something and you don't have cash, then you kind of essentially do, you may still think something else is cheap, but you want to buy something that's cheaper or a better risk reward. But even in that case, arguably, you're still not thinking about cash because you're thinking about the rest of the portfolio and how you allocate between them. So yeah, it's essentially a byproduct. It doesn't say anything about, it's not an active decision. In theory, though, if we find a lot of ideas, meaning that markets are cheap or at least volatile, then our cash would go down. And so if our cash is low, it does literally mean we have better ideas in the portfolio or are able to find better ideas. And if cash continuously goes up, then it means we can't find ways to put it to work. And so that's the level of it. But we think cash is an option on future decisions. Having cash today means that you can buy something attractive tomorrow. Not having cash deprives you of that option. And you have to think about all of the investments that you're going to make on a essentially weighted average basis over the next 10 years. And if you happen to have cash year one, but then have a great investment that was not available in year one, that's available in year two, but has a great result at the end of the 10-year period, then you should hold cash today because it gives you that option to buy in year two. That's how we think about it.
What's the upper bound on cash for you? Is it 20%?
We don't have an upper bound. I mean, by mandate, we can theoretically go up to 100%. Given we run a 20 to 30 position type portfolio and invest globally, where the opportunity set is literally thousands and thousands of companies, I cannot see a situation where we can't find any ideas and everything is expensive, so we continuously sell until we end up with 100% cash. It's highly, highly unlikely that is the case because you can always find something, I think, in a big enough universe. But that does not mean that in any week, day, or month, it cannot go higher than what we want. Ideally, we'd like to be fully invested in fairly to slightly cheaper companies and hold them while they continue to be the case and compound forever and then go to the beach. But that's not the world we live in.